Hey, biotech investors, welcome back. What a crazy week in the markets. Today, we're diving deep into Madrigal Pharmaceuticals' third quarter 2024 earnings. We'll break down their financial performance, discuss the impressive launch of their flagship drug Rezdiffra, explore the competitive landscape, and even speculate on what Q4 might hold for this promising biotech company. Plus, we'll touch on updates since Q2 and give you a fair share value estimate based on my analysis. So, let's get started. First off, a quick overview for those who might be new here. Madrigal Pharmaceuticals is a leading biopharmaceutical company focused on developing innovative therapies for non-alcoholic steatohepatitis, or NASH, a progressive liver disease with significant unmet medical needs. Their flagship product, Rezdiffra, is making waves in the market, and today we'll see why. Let's jump into the numbers. In Q3 2024, Madrigal reported net sales of $62 million. Showcasing a robust performance just 6 months into the Rezdiffra launch. This is a significant jump from Q2, where they had over 2,000 patients on Rezdiffra, compared to 6,800 patients by the end of Q3. That's more than a threefold increase in patient adoption. Research and development expenses were $68.7 million, slightly down from $71 million in Q3 2023, indicating efficient management of their research pipeline. However, sales general admin expenses saw a substantial rise to $107 million from $27 million at the same period last year. This is primarily due to the expansion of their commercial operations in the US. On the balance sheet front, Madrigal is in a strong position with $1 billion in cash equivalent, restricted cash, and marketable securities as of September 30th, ensuring they have ample resources to support ongoing and future initiatives. Some of the key highlights from the earnings call for Q3 2024 include that out of the top 6,000 doctors Madrigal aimed to reach, 40% are now prescribing Rezdiffra. This means that they've doubled the number of prescribers compared to the second quarter. The second point is that more than 80% of people with private health insurance now have coverage for Rezdiffra, and Madrigal Pharmaceuticals achieved this goal 3 months earlier than they've expected. One more important highlight is that Medicaid coverage has been in place since July 1st, and Medicare coverage is expected by January 1st, 2025, which is really important. Last key highlight is that inventory levels are managed efficiently, remaining at the low end of the expected 2 to 4 week range, indicating strong and sustained demand. Rezdiffra isn't just performing well, setting the standard in the NASH treatment landscape. Compared to competitors like semaglutide from GLP-1 class, Rezdiffra boasts higher patient persistency rates, while only about 30% of patients remain on semaglutide after 1 year. Rezdiffra once-a-day dosing as a pill and favorable safety profile are encouraging higher long-term adherence. Moreover, 25% of Rezdiffra's patients are already using it in combination with GLP-1s to treat comorbidities, positioning Madrigal well for the anticipated market expansion as awareness and diagnosis of NASH is increasing. On the research and development front, Madrigal has some exciting developments going on. Number 1, the completion of enrollment for their Maestro NASH outcomes trial, focusing on patients with compensated NASH cirrhosis. Positive results here could position Rezdiffra as the first therapy for this vulnerable population. Number 2, the appointment of Dr. Michael Carlton as head of clinical development, bringing world-renowned expertise to Madrigal's research and development team. And number 3, the preparation for an European launch in the second half of 2025, which could significantly expand their market reach. Financially, Madrigal is managing its resources well. Despite the increase in sales and general admin expenses due to commercial expansion, their gross to net metrics remain favorable, thanks to lower than expected utilization of their copay assistance programs. They anticipate some choppiness in gross to net in future quarters, which is very typical for early stage launches. With $1 billion in cash, almost no debt, and strong revenue growth, Madrigal is well positioned to sustain its aggressive growth and support its European launch plans. Looking ahead, Madrigal has a clear strategy. One, to expand Rezdiffra's market presence in the US and prepare for the European launch. Two, to enhance the research pipeline by exploring combination therapies and new mechanisms of action. Three, to build long-term leadership in the NASH space through strategic hires and continued research and development investment. Based on the Q3 performance and updates since Q2, we can speculate that Q4 sales might continue to see strong growth, potentially reaching $80 million. With the share price soaring to $320, up 50% since the earnings call, investors are likely expecting Madrigal to achieve significant revenue growth, potentially reaching around $475 million in annual revenue. If we project an annual revenue of $475 million, assuming a price-to-sales ratio of 15, a market cap would be around $7.1 billion. Based on the current outstanding shares of 21.75 million, that would give us $327 per share. This means that for Madrigal to sustain a share price of around $320 per share, they need to continue their strong performance and achieve or exceed $475 million annual revenue mark, which is likely in the near term. What would it take to push the share price even further? Say to $518 per share, which is my long-term target, ideal target, if everything happens flawlessly going forward. Let's explore that scenario. To reach a share price of $518, assuming the same 15 times price to sales ratio, Madrigal would need an annual revenue of approximately $750 million. In summary, while reaching a $320 share price already reflects high investor confidence in Madrigal's growth potential, pushing towards $500 would require significant revenue milestone, strategic market expansion, successful clinical trials, and continued strong product performance. As always, these projections are speculative and based on current financial metrics and growth assumptions. It's essential that you conduct your own research or consult with a financial advisor before making any investment decisions. So, to wrap things up, Madrigal Pharmaceuticals had a stellar Q3 2024 with impressive sales growth, significant patient and prescriber adoption of Rezdiffra, and strong financial health. Their strategic initiatives, including the upcoming European launch and ongoing clinical trials, position them well for continued growth and leadership in the NASH treatment landscape. If you're looking to invest in a biotech company with a promising product and a solid growth strategy, Madrigal Pharmaceuticals is one to watch. Stay tuned to the Biotech Investor for more in-depth analysis and the latest updates in the biotech world. Thanks for watching, and I'll see you in the next one. Until then, happy investing.